Hey guys, good afternoon and welcome to Money Matters. Thank you so much for tuning in. Really appreciate all of you who have made the time today to join us. If you are new to if you're new to Money Matters, welcome. This is a talk show that we run bi-weekly now, bi-monthly, where we feature amazing guest speakers, people who have a wealth of experience in terms of managing their personal finances. Sometimes they manage other people's finances and so on. Some of them run businesses and have been successful at it. What we aim to do is bring together all of these experiences in one place so that we get to learn from each other. Because one thing I've realized in my 20 plus years of life is that most of us don't talk about money, especially here in Asia. We like to keep it to ourselves. We don't share our learnings, our experiences, our mistakes, and most of us tend to repeat the same mistakes again and again. So I believe it is very important to have the conversations, to talk to each other about money and learn from each other so that we can grow together. So that's why I started this back during the pandemic, and it is still going strong. Thanks to all of you who tune in whenever we have the sessions, and for those of you who share it, thank you so much for making it such a good show for me, so a good experience for me as well. You can also check out my book, Money Matters, named after the show, where I talk about my personal experiences. So if you are returning, welcome back. I see some of you already dropping comments in the chat box. Thank you guys. So nice. I love it when you guys comment. It's really nice. So today is going to be an exciting session. I don't think I have enough speakers to come and talk about this topic, although it's probably one of the most talked about topics out there. Stocks and shares and investing, all of that is fancy words that especially people my generation love to talk about. But we may not necessarily learn from the right people all the time, or we may not be learning it at a young age. So we kind of like only bump into it when we enter our young adulthood. So for those of you who are students, who are still in school, who are in your teens or your preteens even, I hope today's session will bring a lot of value to you and will kind of like open up the doors to this world for you. The guest speaker is someone amazing. I think the times that I have actually had conversations with him has been a lot of fun. I personally have learned a lot from those conversations, and I can guarantee you will also get to learn from a lot from him as well. So our guest speaker today is none other than Herald Van Der Linde, I think, correct? Who is the HSBC's Chief Asian Equity Strategist. I think he has traveled extensively, probably the whole world, which is amazing. That means he has so much of experience understanding the different cultures and, of course, the finance and the markets across the world as well. He also runs a podcast called Under the Banyan Tree, which you guys can check out on Spotify and all, I think Apple, as well as his own LinkedIn page. If you guys want to follow him, you can do that as well. I dropped the link in the chat box. He's also an author, which I think is amazing. Someone who has written a book. His book is like a whole new level and something all of you definitely should check out. I'll let him talk more about it when he comes on the show. And he's someone who has a lot of experience in this area, and he has agreed to make time for us today at this show to share and enlighten us with regards to this topic. So without further ado, let's welcome our guest speaker on screen.
Hey, hello.
Hello. Hi, Harold. How are you feeling today?
I'm feeling good today. Very good, actually. Beautiful day here on Sunday in Hong Kong. Had a nice hike this
Yes.
morning, so ready to talk.
Perfect. Thank you. Thank you so much for making your time. Like I said, I really appreciate it when people like you guys make the time for the show and share your experiences with us. So yeah, I'm gonna do a little bit of icebreaker, usual things that I ask my guest speakers to torture them and kind of bring out the juicy stuff. So I'm gonna
Yeah.
start off with my favorite of them all, which is what is the biggest, probably the most painful money mistake that you have made that you remember till now and have learned from.
Ah, my biggest mistake was to think that I was really clever, and I started to trade on certain things, options, and some stock. This a long time ago, and I tried
Yep.
to do a short-term kind of trade, and that went against me. And then I thought I need to stick with it. I'll wait until it comes back, and it went further against me. By the time I got out, I'd lost some money. And the lesson I learned was try not to over complicate things.
That's a good one. Because most
Yeah,
of us tend to overcomplicate things, especially when it comes to money.
uh, yeah. I think there's a lot of stuff that is actually fairly simple. And you can make it very difficult, and people like to make it very difficult, and they want to trade in the market and things such. If there's one message I have today, is to keep it very simple, and we'll talk about this in a second, how you can keep it simple. Keep it simple. Don't do anything too much. And in
Yep.
particular, if you are still young, you said there are some people that are in their teens, right? I'd
Yep.
say your advantage over mine is that you still have a lot of time to invest. You can invest for
Yes.
a long time. Now, you might think that if you're, say, I don't know, 15 or 20 or 25 at the moment, you might think, pension, and when I'm 50, that's a long way away. But unfortunately, it comes much faster than you think. And yeah, you should try to prepare for that.
Yes. We do have time on our side. So we should
Yeah,
make full use of it and not end up with the
yeah,
same scenario and make the same
yeah,
mistakes. I love that. I love that. So before we go into, I mean, what you are absolutely great at, before we dive into that, I would like to understand because, like, I don't think any kid, when they are 7 years old or 10 years old, think, oh, I'm going to be a great investor when I grow up. That is so not the ambition that most people have. So I'm always curious how people end up in this field, and why do they choose to stay on in this field, because that's so not the thing that we think of when we are kids. So in your personal experience, like, how did you choose to go into the markets and investment and eventually pursue a career in whatever you do right now?
yeah. Well, actually, it came through multiple ways. Uh, Part of it is, I guess, also by luck to a certain extent. But very briefly, I'm Dutch. I went to university in the Netherlands. I studied economics. I found it interesting and fascinating how economics worked. I wanted to understand that, interest rates and GDP growth. And my grandfather was always talking about that. I found it somewhat fascinating and maybe even mysterious. I didn't really understand it. So I went to university, studied it, and then I went traveling. Came in Asia. I was a backpacker, and decided that I really liked this region. So then, actually, I was in Jakarta. I bought a newspaper, and there was a stock analyst job available, a junior stock analyst, and yeah, I applied to it, got the job in the end, lucky, and yeah, before you know it, you roll into this industry. Yeah, that's
Wow.
actually what happened. Yeah.
I can't believe you mean you just backpacked over here and then you saw the ad for the job and then wow, that's amazing.
Yeah,
I don't think
that
I
must have been 1990. So, yeah, probably before some of your viewers were even born. But yeah, I traveled
yes.
all Indonesia and China and Malaysia and Thailand, these other places. And I
Beautiful.
loved the place. So I thought, yeah, I want to go and live here and see if I can find a job here. And before you know it, you're into it.
Amazing. Amazing. So
Yep.
investing, I think that, I mean, that's what you do in a way. Like, why does it even matter? Why should one even bother learning about it? What's the big deal?
Well, it doesn't have to matter. You could say I'm not going to invest. But any money I have, I'm going to spend. But there's nothing wrong with that. There's nothing wrong with that. But if you want to have, there's a couple of things, and this sounds very philosophical from an old guy, right? An old man, but there's a couple of decisions you're making in your life, for example, who you marry with, or stuff like that, that really can have a material impact on your life. Investing
Yep.
is one of them. If you start early to invest and you keep it simple, as I said, and we'll talk in a second about how you can do that, you can make money, and that makes your life easier. It makes it more fun. You can
Yep.
participate with growth that there is in the world. You don't have to set up your own company and try to become the next Apple or Cisco or whatever, Spotify or for whatever. You can actually, but you can participate in companies that will do that, and join in that. And yeah, and if you then make a bit more money, then suddenly there's options around of things that people like to do. You like to travel, costs money, right? You like to have a maybe nice meal at some point in time, costs money. You might say, oh, I don't really interested in that, but that might change over time. So there are a couple of decisions when you buy a house, whom you marry, if you invest, that can really impact how your life is going to shape up. And the good thing is, and I wish I'd known this when I was 10 or 15 years old, that you can actually start very, very early. Actually, it is advantage. It is a big advantage to start really early. And and then that gives you time to make that money. And by the time you are reaching, you're getting much older, or you, for example, you find later a job, but you're not happy with your job, and
Yeah.
you say, I don't want to work in this company, you have the financial freedom to say, I'm not going to do this. I'm going to look for something else. And I put some money aside that gives me the freedom. If you don't have that, and you lose your job and you have no money, then how are you going to get along, right? You're going to knock
Yep.
on your parents' doors again. So investing can give you a certain freedom, not only an enjoyment in life, but also a freedom to make the decisions that you want to make. And
Yep.
therefore, I think investment is important.
I love that. I think a couple of weeks ago we had another speaker over in the show who spoke about being financially independent and time rich. Because if you talk to a youngster, they're not going to be like, "Oh, I don't care about retirement; it's so far away." But if you give the option of being able to do what you want, like you mentioned, the traveling and changing your jobs, you would actually have the freedom to make these decisions confidently rather than being
Absolutely.
bogged down. Beautiful.
Absolutely. Yeah.
You did talk about you can start young, but most of the I think most especially in my country like Malaysia, most people don't even entertain the thought of kids talking about savings, like let alone investing. So like, how can a kid start young? Like how do we tap into this
I'll
world
tell,
or like that?
I'll tell you a story. In this must have been 1989, I think. Myself and a friend of mine, his name is Paul, and Paul is now a professor in economics. We went to a bank in the Netherlands. We were young students, so we were probably, I was 17, he was probably 18, something like that, but we were very young. And we wanted to make an investment in stocks. So we went to a bank, and basically the bank manager in those days said, well, sorry guys, bugger off, unless you have a lot of money, you can't get in. Because
Yeah.
it was expensive, it was difficult, you needed all sorts of forms to sign, and they only wanted to really invest you if you had like $100,000 ready, right? US dollars. Then
Yep.
they wanted to talk to you. Anything below that, and maybe $25,000, they wanted to talk to you. But yeah, we had a couple of hundred US dollars, and we just wanted to give it a try. Impossible. The good thing is that is all possible now. You can go download an app. There's all sorts of brokers, banks, whatever. You can download an app and you can start trading. And we can talk a bit about what you should buy.
Yep.
But I think you can even start before that. So when my son was about 11 or 12 years old, I made a deal with him. He could not download an app and he could not have a bank account because he was still too young, right? Normally by 18 or so, you
Yep.
can start to invest. So he couldn't do that. So what did I do? We said every time he had a bit of money, cleaning the car, helping out somewhere, his grandparents gave him money. At the end of Lebaran, right? The Muslim Ramadan month, people sometimes share money, or Chinese New Year, they get a bit of money.
Yeah.
I told him half of that money you give to me. Yes?
Okay.
And we then looked on a particular share, and I'll tell you later, it's actually what an ETF. We could talk later what that is, an ETF. But
Okay.
with that, you buy the US market. We looked at the price and said, okay, you got, let's say, 500 US dollars, and the share is costing 250 US dollars, then you get two shares. And we will write this on a piece of paper. And every time he had a little bit of money, sometimes $100, I said, okay, that's one third of a share. And then, okay, you can buy two. And then you can
Yeah.
buy one more. So in the end, let's say he had maybe 15 of those shares. By the time he was 18, now, he had always given the money to me. I just simply put it on my bank account. By the
Yeah.
18, I said, okay, you have 15 of these shares. We set up the bank account, and now I give you enough money to buy those 15 shares. And then by that time, he literally had it on his own app, and he goes on, and this is what's happening at the moment. So he still has that. And I'll tell you later
Yes.
on what he bought. So you can even do that. You just need to make a deal with your parents. And remember, you check the price the day you give your money to your parents, and you say, with this particular money, I could buy two of this or three of this, and you put it on a piece of paper and don't lose that piece of paper, right? Maybe you put it in a
Yeah.
spreadsheet or whatever, but you don't
Hold
lose
it
it.
on.
And
Hold on to
oh,
it in dear
hold
life.
on, yeah, that's your money. And then by the time you're 18, you tell your dad, listen, set up a bank account, help me out, go to the bank. You need to fill in some forms and stuff like that. By the time it's all done, and you need to
Yep.
be able to trade in US stocks. We're going to talk maybe about US stocks a bit, but you can do it in Malaysia stocks if that's possible.
Yep.
Then you tell you that, no, now you're going to give me the money back, but I got 15 shares. I might have given you 500 US dollars over the last 6 years, but these are now 1,000 US dollars, so you got to give me 1,000 US dollars. So you're already participating if these stocks are going up.
That's very,
It
very
can start
cool.
very early.
I would have loved to do this when I was young, if that was an idea. But if
Imagine,
parents, you
I
guys
think
are
you're young.
watching,
Imagine me, right? Yes. Yeah.
I just like opened up like Apple share price. If I had done this like 5 years ago, it was like so much
Yeah.
of growth, 100 and 250% growth. My lord.
Yeah. No, this is important because you looked at the Apple share price. So what people like to do, and this is one lesson, what people like
Yes.
to do is they're going to look at particular share prices, right? So
Yep.
in you're going to look at large Malaysian companies, or you think Apple, I know, or I want to buy Spotify, and all of that is really good. The problem
Yes.
is, and this is one of the big fundamentals of finance, is do not buy one share.
Ah, yes.
Because if you buy one share and the company has got a problem, then you got a problem.
Yep.
Yeah. With a share, you are the owner of a company. Now, that sounds really cool, but there's of course maybe a million owners, right? You're one of the million people that got a stake in a company. But
Yep.
if something goes wrong with that company, the chairman has a car accident, somebody steals some money, bad news arrives, that share price can go down. The
Yep.
lesson that we have in the lesson, hold on, there's something else going on here.
Sure.
One
Sure.
second.
So for those of you who are watching, if
Sorry,
you guys
there was another
can
phone that
Google.
went off from my wife. So, sorry.
No
So
worries.
the fundamental lesson that we have is if you buy one share, it can go wrong. If you buy
Yep.
2 or 3 shares, it can go wrong. But the chances that 3 companies go wrong at the same time is small.
Yep.
Now the good thing is now, when I went to the bank in 1989 with my friend, you you could only buy individual shares. So what we should have done, we should have bought maybe 50 or 100 different shares. And that is difficult. You have to buy them all individually, and you got to figure out who they are, and you got to track
Yeah.
them. Headache. The good thing is there is something called an ETF, an exchange traded fund.
Fine.
So what you do, you buy an ETF, and these ETFs, they have 100, sometimes up to 500 companies. It's a computer
Yep.
program that buys basically 500 shares immediately. So you buy it, and they do it for you. Very
Yep.
cheap, because you
Yep.
only make one purchase, and otherwise you have to make 500 purchases. And it allows you to diversify. It means that you don't have one particular company, you have 500. Now, one of these companies might go bankrupt, but another one will do phenomenally well. That risks you take away. So you don't have to follow individual companies, stay on tune what happens with Apple or something like that. No, you just buy the ETF, and there's thousands of ETFs out there, but you buy a simple ETF, one that, for example, tracks something like the US market, and there you go. You just stick
Yep.
with that.
Yep. All right. ETFs. I think before we go into ETFs and all of that, um, I think we should probably establish some of the words that we'll be using. Like
Yeah.
for example, like investing, and actually, what is the difference between investing and trading? Because I think a lot of people misunderstand the two terms in
Yeah.
a way. So, like, what are some of the words we should know about before we start
Yeah.
exploring this field?
Well, it depends a bit on how you define it yourself, if you want to be technical. But let's make a distinction here.
Yep.
Trading is very often people buy now and they want to sell in a very short time. Sometimes within a day, you buy in the mornings, in the afternoon, you try to sell. The share price goes up that day, maybe by a little bit. Wow, you make some money, 1% or something like that. Fantastic, right? Good for you.
Yep.
So trading is really short-termish. You've got to understand what sentiment is. Now, that sounds like, oh, that's no risk to that. If I buy in the morning, in the afternoon, what can happen? No, there's a lot of things that can happen. Suddenly, something can happen in the world. A plane falls somewhere, a war starts, an earthquake comes, whatever. This unexpected events that suddenly can mean that the market can go down. So that
Yep.
doesn't come without risk. But trading is typically seen as something that you look at one individual um, security, as we call it, stock, and you have a very short-term focus.
Yep.
Investing is something you buy now, you say, I keep it there for the longer run. That means that sometimes it will go down, you don't sell it. It goes up, you don't sell it. You stick with it, you look at longer term trends. Now, it has shown academics, professors, experience that trading is not as profitable as investing. And this is rather unfortunate because people think trading is exciting. You buy now. Oh, I bought this morning, I bought this stock, and I think it's going to go up. It is nice to talk about it, right?
Yep.
Investing is actually very simple and maybe, yeah, it doesn't sound as exciting, right? You buy something now and you just stick with it. It's like, maybe 5 years, 10 years, certain things you can stick on for 20 or 30 years, or maybe longer if you want. Doesn't matter.
Yep.
So you don't do too much. But turns out that if you invest for the longer run, and if you're therefore young, you can easily do that because you have a lot of time ahead of you, is much more profitable. Why? Because if you trade, you have to pay your broker every time. So it sounds exciting, but every time you pay them, you go in and you're out, you're in and out, in and out. He's already made 6 trades, and 6 times you have to pay a small commission. You think it's not enough
Yes.
commission, but it adds up. Investing,
Yep.
you only make one time a purchase, and over the longer run, chances are that you will make money anyway. So investing will make you more money, but for a lot of people, it is not as exciting as trading.
Yes. I like that. A lot of people do overlook the other charges and all of that, and
Yeah,
make decisions based on the overall view rather than the details of it.
yeah.
So, what are some? I think we were mentioning about ETFs and all of that. So, how does one actually invest, and what should be the things that we look into?
Um, you mean how do you invest in terms of what do you buy in a sense, or how do
Yep.
you approach that? Yeah, yeah.
Yep. Yep.
No, I think the easiest way is a fund. You can buy individual shares or stock, or we call it equity. Equity means equity means equal, right?
Yep.
If you buy a stock and I buy stock, you have the same rights as I have, right? It doesn't matter. So and in a way, if somebody's got a company and says, "Listen, I need some money. Can you put some money in my company?" Even if it's a small ice cream parlor on the street, right? It's your friend who's got an ice cream shop and says, "Listen, I need some money to paint the walls and get some new ice cream in," and you say, "Okay, I'll give you a bit of money, but make me a shareholder. You own equity. You own a share in that business. That is
Yep.
an unlisted business, a small business. That's fine. But bigger businesses have said, well, instead of selling it to our friends, we've gone to the market, and anybody can give us money, right? And anybody can participate. So okay, so that's you buy shares. As I
Yep.
said, you can do that through apps and banks and stuff. Now, as I mentioned earlier, if you buy these shares, you can buy them individually, an Apple or a Cisco or a bank or whatever you like, yeah. And people tend to like to do that because it sounds really cool that you've done a bit of analysis. The problem, as I said, is it is not wise to do. What you should do is to buy a fund. You buy a fund that diversifies. The
Yep.
problem is that certain funds are expensive, or you need to get in, or it's difficult to get in. But there are funds that are also listed on the stock exchange, funnily enough. So basically,
Yep.
it's a computer program listed on the stock exchange, and those are called these exchange traded funds that we spoke about earlier on, ETFs. So you buy an ETF, and effectively, a computer program buys for you, say, 500 shares in the US market. Great. So you bought with that, say, a couple of $100. You can start with it. You've instantly bought 500 shares in the US, and you will track the value, the combined value of those 500 shares. So if their businesses are doing well, oh, fantastic. Their share prices go up, you will participate. You're
Yep.
in the market.
Yep. Very nice. Very nice. So for someone, I think many times people talk about, okay, this is how you're gonna make it, or this is how you do it and all of that. But like, what are some of the things you should be careful about? I think earlier we spoke about like the charges in trading and all of that.
Yeah.
But like, uh, the getting into ETFs does help you in terms of not going in one single share and exposing yourself to too much risk. what other things should you be careful about, especially if you're someone who's young, who doesn't really have much experience and don't really
Yeah.
understand what's going on in the world?
There is one big risk with investments, and that is yourself. Yourself. Because two things happen with all people that invest. The
Yep.
share price goes up. You buy, let's say, a stock, right? A US stock, okay, or an ETF for my part. And wow, it is doing good. It goes up and up and up. And you've,
Yep.
like you mentioned with some of the other share prices early on, it went up 2.5 times. And you think yourself, I am really clever. I'm gonna, and you've made a good decision. Absolutely, you've made a good decision. The problem is you start to think that you got it. You know how
Yep.
it works, and you start to take on more risk. Now you're going to go for individual shares or whatever. And you think, I know how this works. I understand it. You got to be careful if the market goes up. Also, don't get too greedy. You think, oh, it's going to go up another 2.5 times. Because the moment something goes up 2 times,
Yeah.
you look back and said, "Oh my God, I wish I had put so much more money into that last year when I could have done so. I would have made so much." We get greedy,
Yeah.
and greed is a problem. So you think, "Oh my God, if it doubles again," and there's always some people say, "I think this year is going to double," and you listen to them and you think, "Oh my God, I should," and you put more money into it. So that's another risk. Greed. The second risk with yourself is that you get really afraid. The share price, you buy something, yeah, you put, let's say, 500 US dollars. I'm just putting a number, 500 US dollars, you save, you put in the market, and the market goes down. And you think, oh my God, that's not good. And then people tell you, oh my God, are you in shares? It's not good, man. Stock markets go down. And you look the next day, it went down. You think, oh, what have I done? Oh, I'm losing money here.
Yeah.
Oh, and you wait, and you think, oh, maybe it goes back. I'll sell it when it goes back, when it goes up. That is then a decision that people make.
Yeah.
Turns out it doesn't go down. And it goes down again. You think, oh my God. And then you sell it. And you sell it. And then it goes up 2.5 times. And then you think, oh my God. When we are humans, so when we invest, it goes up, we become greedy. We want to make more. And if it comes down, we can't sleep at night. We're afraid. It's like, oh my God, what am I going to do? And this is the way to get around this is not to do anything at all. You put the money in, but you only put the money in the market that you do not need for the next years. You
Yep.
do not put money in the market that you need because you need to go on travel, holiday, you want to buy somebody a present for your mother or whatever. That money you stay inside. You only put the money in the market that you probably don't need for the next 5 years. Why? Then you are not forced to sell. Because if you
Yeah.
need to sell, you need to get the money. When the market goes down, it is painful. I've been there. You don't want to be there. So only the money that you don't need. And when it goes up, do not think that you should have done more and that you really understand what goes on. And if it goes down, be careful. Don't get too panicky. Stick with it. Think about the longer run.
I
And you
love
could
that.
do that when you buy these ETFs. If you buy an individual share, the problem might have a company. But if you buy an ETF that is diversified, it's got lots of different stocks in it, then you don't have to worry that all of these companies can go bankrupt or something like that. That will not
Yep.
necessarily happen. So then you can say, okay, it goes down at the moment. And there are years where the stock market goes up 30%. It can also go down 30%.
Yep.
The US market last year went down well over 20%. Chinese market went even down more than 30%. So those things will happen, and you just got to learn to live with it.
Very nice. Very nice. I love that. I think fear and greed affects literally anything and everything in life. And it's
Yes, yeah,
usually these two that brings you down, and including investing, including finance. I
yeah.
love
I'll,
that.
I'll tell you a small story. I
Yes.
used to live in Jakarta in 97, 98. That was what the Indonesians called Kismon, the financial crisis, right? That was in
Yep.
Southeast Asia, Malaysia, Indonesia, Singapore, Thailand. These stock markets collapsed.
Yep.
And at the time, and I don't know the exact numbers anymore, but let's say the stock market was trading at 100, it fell all the way to 20. And you think, oh my God, it went down. Oh, I lost the money. Oh, it's so bad.
Yep.
Now that same market will trade at 1,000 or maybe 5,000. So that movement of 80 in 97, if you looked it up on the chart now, it looks really small. It's not so big. So if over time, what looks like a real big thing at the moment, in 10 years' time or 20 years' time, was actually a blip. But
Yep.
we get obsessed by the fear of it. And if you're young and you can invest for decades to come, I'm an old kind of guy, right? So I mean, yeah, I got to be careful. At some point in time, I need to cash in and just spend it, right? I can't live forever. But if
Yeah.
you're young, that's far away. So you have the time to sit in it. And if I would go back and say, if I could do anything different again, I wish I was back in 97, 98 Jakarta, and whatever money I had, and I didn't have a lot of money, that I actually, when the market collapsed, just bought into it. It doesn't matter when. But when I
Yep.
would have bought into it, because after that, things went so much better.
That makes so much of sense. So I think if someone who is watching this, and I'm just predicting this, that okay, they're going to be like, okay, so Harold say go into ETFs, or like, oh, ETFs is the best thing. I mean, like, one of the things I should look into. But then they're going to go into all Google ETFs, and they're going to see so many options, or if just purely shares in Malaysia, there's so many, and then if you look into the US markets, there's so many, and it's just never ending. There's so much to look at. So how do you choose? How do you make a decision on what do I buy, what do I
You're
invest
right.
in?
Just like with stocks, the number of ETFs is literally bewildering, right? There's
Yep.
thousands of them. Some of them are really specialized ETFs. They look, for example, at ASEAN consumer names. Other
Yep.
ones are really generic. If you invest there, if you're a particular professional investor that needs to do things really unique in finance, certain ETFs will be very interesting for you. But most of us here, you and I, and whoever listens to this, we're not specialized institutions that need to invest pension money for other companies. No, we are just your average person that just needs to invest and save a bit, right? So
Yep.
you just buy the generic ones. You buy the really big ones. Um, there's a big US ETF. There are big European ETFs, but I would just buy something from some of the big stock markets.
Yep.
If you look back over the last 100 years, and 100 years is an awful long time for most people, right? The US ETO stock market has got a phenomenal track record in terms of how it's done. Well, that's a good place to start. Just say, listen,
Yep.
let me buy that, and you just buy a generic ETF, nothing too specialized. You look at size, you can Google that easily. And the other thing you have to look at is the cost of buying it. It should be maybe 0.1, 0.2, 0.3% of the purchase that you make. So if you buy, say, for $100, right?
Yep.
1% would be $1, 0.1 would be 10 cents. So it will cost you
Yep.
10 cents to buy that, or maybe 20 cents. You look at those things a little bit, but that's it. To buy a big ETF that's got at least a couple of hundred shares in it. You're diversified, and you can sell it at any given moment in time. If you
Yep.
if you buy a car, or you buy a bicycle, or you buy a motorbike, yeah, and you want to sell it, you got to put it in the newspaper, and it takes 3 weeks, and somebody comes and says, "Ah, I like it, but, you want $100 for it, but I'll give you 90.
Yeah.
We got to negotiate." With stocks, it's easy. You don't have to wait. You can buy and sell any day, and the price is there. It says this is the price. You want to sell it, and if you don't like it, well, don't. Boom. So
Yep.
easy. Yep.
Yep. I love that. No bargains to be done. Just go for the price
Yep.
that is listed there.
Go for the price that is
uh,
offered. Yes.
so I'm gonna bring up in in a couple of weeks we are gonna have a workshop as part of the teenageentrepreneur.com where we talk about Asian markets, a lot of that. And I think as a youngster and I was in school, very few people had conversations about this. Or like in Malaysia, we have the Edge newspaper. Like very few people go look at that newspaper. We are looking at the comic strip on Star. Like that's what I would do.
Yeah.
And so
No,
it's
me
not
too.
really something we that's not something we learn about or take the effort to find out about. So is it relevant for the young to be learning about the markets and how it works and try to understand this, or is it something that it doesn't need to be done now, you can do it later? What is your thoughts on that?
Everything can be done later, but if you're young, anything you learn when you're young, you can use for a whole lifetime. Yes. If I'm
Yes.
85 years old and I'm going to learn a new language, how long can I speak it, right? I mean, but if you're 10 years old and you learn that new language, you can at least speak it for probably, hopefully, another 70, 80 years. So
Yep.
when you're young, it's a good time to learn. Secondly, it is easy. Well, actually, some of the key principles: diversification, don't
Yep.
trade too much, stick with funds initially, don't buy necessarily individual stocks. That's it. Now, in that workshop, we're going to talk a bit more about individual markets, different markets, how they behave, and we're going to talk also about other slight technicalities. So if you're into this and you think, I want to learn a little bit more, you tune into the workshop and you learn more and you can talk with a bit better with your friends about it. But the principles eventually remain the same, which is diversify, stick with some funds or whatever, and stick with it for the longer run.
Yep. I think just being aware of these different things will also help you do well in other areas in life. Like I think many times, like for myself, just being aware and having some of knowledge in the many different areas helps me
No,
to do my
no,
work better.
exactly. Knowledge of something makes it more enjoyable. Why do a lot
Yes.
of guys like soccer or football? Yeah, because they've played it, they know the rules of the game. And if you know the rules of the game, you watch it on TV, you understand what goes on. And then it's the details. Oh, this guy is really good on his left foot or right foot. And this guy is very good as a forward, but he's a really good defender, or he's really crappy as a defender, whatever, right? We make
Yeah.
judgments because we know the rules. And then it becomes enjoyable, it becomes entertaining, right? And that's
Yep.
with a lot of things, actually. If you know a little bit about it, it becomes enjoyable. And so it is with investing. If you know a little bit, it doesn't have to change. But it doesn't have to change what you're going to do. But if you know a little bit about it, it makes it more enjoyable. Then you understand what goes on. Suddenly,
Yep.
it makes you see connections, and then that's just fun in life. Yeah,
I love that because I would have never thought of soccer and sorry, football. My shins will get
yeah,
angry.
yeah.
Because we were literally watching the World Cup a few months ago, right? And there were some of them who were really into the game, and then some who were decent kids. So just knowing and learning, understanding things better would
Yeah.
help you be
I don't
much more
know.
excited about it.
Do you know cricket? Have you ever looked at cricket?
I just know the word cricket. I don't know anything other than
No,
that.
me neither. So one of my best friends is crazy about cricket and woke me up once in the middle of the night to tell me that the cricket game England is won. Uh, Fantastic, but I don't understand anything of cricket, so I don't see the enjoyment in it. Right? I'd love to go and
Yes.
somebody teach me, but I haven't never had the time to do so. But the moment you know it, then it becomes interesting, and it's so with so many other things.
Yes.
So it is with soccer, so it is with investing, and actually, to be honest, there's a lot of other things. So it is with movies, so it is with actually it can be with wine or music,
Yeah.
opera, art. It doesn't matter, but investing definitely as well.
Lovely. Ah, there's a cricket fan in our audience.
Oh yeah, there's a cricket fan. There you go. Yeah, he probably knows
So
much more about cricket than I do.
yes, yes. I mean, cricket fans are a whole new level, man.
Emotional,
I
absolutely, yes, yes.
so
Hmm.
I think what I would like to talk about next is, of course, your book, and I think you also have the podcast as well.
Yeah,
Who can you share a little bit about it with us? How can we get it? Also, what will we get out of tuning in for the podcast or reading the book?
yeah. So we've spoken about some really basic principles, and to be honest, if you're a professional fund manager and you're in your 40s and 50s and you've been appointed by Big Bang, some of these principles you just work with every day.
Yep.
So the book is on Asian stock markets, and it is really for people who know nothing about finance, but they want to know something about it. So it's a very easy read. Some of the stories are they're just stories in it, but through the stories you can actually find some of the underlying mechanics or dynamics that are at play in market.
Yep.
So you can buy the book, read it if you're into that. If you're not, and you say, I'd like to know about it, but I'm not going to really read the book, well, pity, but you can tune it with the workshop, right? So that will go effectively through the book. But if you've read the book or you've done the workshop and you say, okay, now it's interesting, but I want to stay a little bit up to tune what really happens in markets, well, we've got a podcast. Again, it is for people who know nothing about finance. So it's not going to be about all sorts of technicalities. We try to keep it very simple. I do it together with my colleague. His name is Fred Neumann. He's for HSBC the chief strategist, also chief economist in Asia. I'm the chief strategist in Asia. So we both together talk about what happens in market or what we think might happen in markets, or just to explain what goes on for those people who don't have the time to look at it. So if
Yep.
you're into markets and you want to, and you think, okay, I understand some of the basic principles. There are a couple of principles we'll discuss in a bit more detail in that workshop you do in 2 weeks' time. But then you have the principles and you listen to the podcast. You say, oh, now I understand why this goes on. And then you understand a bit more than just the headlines in the newspapers or the stuff that you see
Yep.
on TV. You think, oh, okay. And you can participate in discussion. If people say something, you say, oh, I don't think so. I think it's got to do because interest rates have gone up, or I think this or this is happening. And
Yeah.
you're part of the debate. That's good fun.
Yep. I love that. I love that. I think one of the most important things is that to not stop learning. Like I think in Money Matters, I aim to create a wide exposure to different topics, bridge people together. But it shouldn't stop here. Like if you want to learn more, you should continue your learning journey in a way. So things like your
Absolutely.
book
And
is a great platform to get
yeah,
started.
no, of course, I think so because I put a lot of effort into it in order to get the book out. And, you don't make any money on these books. You actually do that for people. You think, okay, I know something. I can tell you that maybe you benefit from that, right?
Yep.
If a dentist would write a book about dentistry, I might be interested in that as well, if it's not too technical. Because then I'd say, I want to know. Or maybe a cricket fan should write a book about cricket for those who know nothing about cricket. Yeah, and there
Yep.
you go. And then you can share that enjoyment. And
Yes.
that's the whole idea of this particular book. So, yeah, of course, I urge people to go and buy it and stuff like that. But
Yep.
the proceeds actually go to a charity that on financial literacy. But
Perfect.
yeah, it's really for people to get to know without having to go through difficult charts or terminology that's used in finance. It's all very straightforward.
Yeah, beautiful.
And
For those of you who are interested, I am leaving the link in the chat box so you guys can check it out as well as on Amazon. So I think as we approach the end of our time, I think I have one last question for you, Harold. Just
good.
like one final takeaway, or sometimes it could be a principle that you have followed. It could be something that we have covered, but I'm gonna place a restriction on just one thing that the audience should take away from today's session.
Is there's one thing, and I put it in the context of investing. If you are even remotely interested in it, do it. You only start to get involved when you start to do it. So say that on Monday or Tuesday, either you're going to talk with your dad and say, listen, I'm going to invest that, I'm going to give you money, and this is how I'm going to do it. And I'm going to buy an ETF. And maybe you have to explain to your dad what that is. Doesn't matter. But just do it. If you want to get things done, do it yourself.
Amazing. I love that. If you're interested, just go and do it. Beautiful.
Go
Thank
for it.
you.
Yeah.
Thank you so much, Harold. Really, really appreciate your time for being a part of Money Matters today. That's been a lot of fun. I
Well,
think a
thanks
lot
for
of
inviting me.
people enjoyed.
Yes.
I have a few people mentioning it's a great session. So
Good.
if you guys are tuning in today, please do join us for the workshop that's coming up in 2 weeks, part of the teenageentrepreneur.com platform. If you guys want to find out more details, PM me, DM me, depending on which platform you're watching this on. And I hope to see you guys there. Thank you so much, Harold. Have a great day.
Thank you.